Oracle's up more than 40% after earnings. They gave a little bit of it back, but come on. I mean, it was ridiculous. It was a wild reaction for a company that's worth nearly $1 trillion. I think it made Larry Ellison the richest man on earth, surpassing Elon Musk. This is a company that's reinvented itself a million times over. I'm blown away at what they've been able to do. And you talked about something that I found the most, I don't want to say concerning, but surprising. It put me back, and I was how far out they were forecasting. I forget if it was 2029 or 2030. They were talking about doing 144 billion in one division. To forecast that far out, um, reckless. I don't know. Is it gear? But it seems like it's already booked revenue more or less. So. Uh, what is this watershed moment? Let's talk about Oracle's earnings, and then let's go into Neoclouds.
And what we want to do is often I'll talk about trends and give kind of an overview. So, as we're making future recommendations or discussions, you can come back and listen to this podcast if you want what the overview is. So, we want to give a quick overview. Basically, the cloud computing market's been dominated historically by three companies, which is Amazon, Google, Microsoft. We call these the hyperscalers. As a group, they have a majority of market share. Now, the change that's happening is that these companies used to have, clouds that were for, the prior generation of computing. They weren't built for, these massive GPU clusters and a future world of AI. That presents an opening, Austin. So we've talked about why these companies are gaining market share right now. Amazon's market share is above 30%, but they only get 20% of GPUs. These companies like Oracle and these Neoclouds, they have 7% of revenue-ish as a group, but they're getting 29% of GPUs. So if demand exceeds supply, and these are the companies that are getting the GPUs, it opens up a window for these companies to compete where they couldn't before. The number that should get everyone a little bit of salivating is 28% projected CAGR for the hyperscalers through 2029, the end of the decade, 66% for Oracle and the Neoclouds. So again, we talked about some of the numbers behind Oracle's earnings, how fast the takeoff is. Oracle is quickly going to be, by the end of the decade, if they deliver on this OpenAI contract, a fourth hyperscaler. They're going to be the size of Google, Microsoft, and Amazon.
With a specialty in GPUs, right? And that's the distinction. When we're talking about these cloud companies, everybody knows cloud computing, right? But the thesis there was it was about cost management, right? Outsourcing your costs. You didn't have to build this infrastructure. It was low cost wins. And that's where AWS took market share. Neoclouds are about performance. Neoclouds are about GPUs. This is outsourcing GPU as a service. So they are both clouds, but there is a fundamentally different value proposition. One is you can run your cloud services on AWS cheaper than anywhere else, and it's stable. Neoclouds are, we have the fastest, baddest GPUs, most chips. Let's go, and that's for training, and that's for AI. So I want to make sure that there's not all clouds are created equal here, and the thesis here is very much different. This is not a low cost provider. This is a Ferrari rental service.
Yeah, and some of the cost is more competitive than you might expect. But it presents an opening, and the reason that it does present an opening is because Nvidia, again, we talked about who they're selling chips to, but Nvidia has been financing these companies, and this is just another. You look at Nvidia, the genius that had to go into building CUDA, the genius that went to building their networking unit, the foresight. They've been investing in all these companies, and a lot of people on Wall Street accuse this of being a Ponzi scheme, but this appears to be a 5-year plan to avoid them being locked into having only 3 customers. What they've done is they've essentially managed to take themselves, if NVIDIA was beholden to 3 customers, they would have had limited upside in the years ahead. Now they're diversifying their customers to a massive degree. So again, this is the genius. It appears to be a genius move by them.
Well, and I hope the hyperscalers are thanking NVIDIA and dodging antitrust bullets here too. NVIDIA planted the seeds to prevent maybe some additional antitrust strays that those companies could have caught if there were only 3 buyers muscling each other out. So they owe NVIDIA a lot right now, not just for their chips, but for maybe spreading their chips across the landscape a little bit more.
Yeah, although they might do a little Game of Thrones and as Nvidia's turn around and shiv them in the back. I don't. There's a reason they're trying to design with Broadcom. But let's talk about who the Neoclouds are. Just we've established what this opportunity is, and I appreciate layering that on, Austin. It is just helping people understand the high level opportunity and who are the companies. Well, the biggest one's going to be CoreWeave. This was a company that IPO'd at the beginning of the year. They have a $63 billion market cap as we filmed this in mid-September. They have 5.3 in projected revenue to give you so that's more than 10 times revenue. But the other side of that is expectations are they'll grow to 21.5 billion by 2028. So what are the elevator pitch reasons for buying CoreWeave? Well, they actually, if you look at SemiAnalysis, which does I think the best research in this area, they have the highest rating. That is a combination of things like cost for one, but also security, network performance, and other factors. They actually rate CoreWeave as being better than AWS, as being better than Azure, as being better than Oracle, better than Google. So they actually have what SemiAnalysis estimates to be the best AI offering. They're a first mover. They have investment from NVIDIA. They're the first to deploy a lot of the cutting edge Blackwell systems that are in so much demand. And Austin, they have a lot of emerging scale in a business where scale matters. So this is a company that has received a premium valuation, but it's because they have a premium offering. Next, we have Nebius. They're at a $23 billion market cap on 576 million expected in 2025. So now we're at closer to 50 times sales, which is getting to the bleeding edge. But expectations are for them to reach 5.7 billion in revenue by 2028. They were a first mover in Europe, so they have a differentiated offering where they have expertise in Europe, which is an area where demand will be rising a lot. Thanks to that expertise, they just won a $17.4 billion contract from Microsoft, and they're validated by third parties. They received a gold rating, which is just below CoreWeave. And puts them on equal level to Microsoft and Oracle from SemiAnalysis. So they have a product that is truly good. Austin, so those are the two main ones. If you're looking at this market, CoreWeave and Nebius are going to come up first, but we have a wave of IPOs coming. We also have a wave of companies that were doing Bitcoin mining and now pivoting towards AI. I'll just mention two of these quickly. Iron, which is Iris Energy, 10 billion market cap, 510 million expecting revenue this year, up to 1.5 expectations are by 2028. Their biggest advantage, they've got a power cost advantage over many other companies. They've been rapidly retrofitting their data centers for Blackwell, and they are amongst the more speculative parts of investing, a favorite because it's believed they're going to win some hyperscaler business coming up. Finally, we have Applied Digital, that's ticker APLD. We talked about them in our kind of YOLO segment because they're small and extremely ambitious and have big plans. I think the stock's done very well since we did that segment. I think they were worth $3 billion at the time when I looked it up before the show. They're at $5 billion. So they've clearly seen some strong gains. And again, Austin, the biggest thing with this market, I would say, when CoreWeave had first IPO'd, I said we would be avoiding it because of the risk profile, and we had Amazon at the time, so we had exposure. What these Neoclouds are, they're essentially levered bets on AI demand exceeding capacity. As long as that situation persists, they will continue to do well. The problem is over probably a 5 to 10 year time frame, this is a business where scale matters, and it is likely we're going to see a lot more IPOs, and the majority of these companies will either be bought or go under in some form, because this will be an industry that will continue to consolidate. But for now, the dynamics are extremely attractive. Being an AI first cloud company provides an entry point to compete with the hyperscalers that did not exist 3 years ago. So, Austin, we're going to keep discussing this space, and, hopefully this gives everyone an overview that when we discuss it more, they'll have an understanding of the competitive dynamics and the players they can invest in.
Yeah, the criticism I've heard of Neoclouds, of which there are many, has been that it's an industry that exists at a point in time due to constrained supply and one dominant chip and chip manufacturer. But if you subscribe to that, you would have missed out on CoreWeave's 220% run in the last year. So there's always room for a little bit of YOLO out there. And um, I don't personally hold that view, but I find that is the criticism of it, right? That this is an industry that exists at a point in time.